So I'm here to show you why you have not been making money consistently in the market. I can guarantee you, if you watch this video till the very end, it doesn't matter if you've been trading for 5 years, 10 years, 20 years, you're definitely going to learn that when it comes to trading, there's much more that goes into it than just having a proven working strategy and being able to do your fundamental analysis properly. In today's session, I'm going to show you guys a system that we've built for all of our clients, all of our mentees, that's been helping them to make money consistently over a long period of time. I'm not talking about flipping accounts. I'm not talking about adding $100 into your account and take it to $10,000. We do not believe in flipping accounts. We believe in consistent growth. Because at the end of the day, I'm not trading just to trade, right? This is what I do for a living. This is like a profession. You gotta stop thinking that you're going to get rich overnight. All these guys make it seem online where as soon as you start, you add $100 in your account and you're gonna make millions. Because think about it, right? I can guarantee you the job that you're working for right now, they have an SOP, right? The job that I used to work for in the lab, we must follow the SOP to the T, so that way we can deliver proper results upon doing an analysis, right? It's the same thing. If you're trying to gamble your money, then sure, there's no need for you to follow an SOP. That's what makes us so special, because we do not follow what the other communities are doing, which is flipping accounts. We do not believe in flipping accounts, right? We believe on having a proper system that you can rely on for when you have bad days, bad weeks, or even bad months, and you still gonna have plenty of money left in your account for you to trade with. So this is the list of the Boomin FX trading plans that we actually created for all of our mentees, all of our clients. As you can see, we have a $500 trading plan, $1,000 trading plan, all the way to $20,000 trading plan. If you're just getting started with your trading journey, we usually recommend for you to start small, anywhere between $500 to $1,000, but $1,000 is probably going to be the sweet spot. The reason being is you're probably going to make a few mistakes along the way. That is probably going to cost you like $20, $30, $40, $50 compared to starting with like a $20,000 account, and those mistakes might cost you like thousands of dollars, right? So $1,000 account is definitely the sweet spot to start with as a beginner. So that way, if you make a few mistakes, you're not going to lose much, right? But nonetheless, this is the system that we follow here at all times. Yeah, Boomin FX. This is more important to us compared to the technical analysis strategy that we use and the fundamental analysis strategy that we use, right? This is literally more important to us because this is what's going to keep you in the game for a long term, guys, right? Having a proper trading plan is one thing, but being able to stay consistent and being able to stay disciplined and follow that trading plan through bad and good days, that's what's going to differentiate you from 95% of other traders out there. Trust me, right? So I'm going to open the $1,000 trading plan and I'm going to go through everything, right? So this is the Boomin FX $1,000 trading plan, and rule number one, guys, we do not recommend for any of our clients or any of our mentees to risk more than 5% per trade. We recommend 1 to 5% per trade, with 5% being the maximum percentage, right? That's rule number one. Also, guys, I've seen so many videos online of traders adding like 10 entries in the same area of the market, which is insane. The minute I see something like this, I automatically know that you're gambling, because there is no need for you to add 10 entries in the same area, pretty much having the same entry price, which is crazy. So keep in mind, guys, as soon as you place a trade, most of the time the trade is going to be in drawdown. So what is the point of you adding 10, 20 entries in the same area of the market? It makes absolutely no sense, right? So what we do at Boomin FX is, right, we're going to add one entry, right? So, and we typically risk about minus 50 pips. I'll be going over that in a bit as well. We're going to add one entry, and stop loss is going to be at minus 50 pips. And if the market goes in drawdown, which is what's going to happen most of the time, as soon as you get in, you're definitely going to be in negative. Sometimes it might be like a sniper entry. As soon as you get in, then the trade goes your way and you're in positive. But most of the time, if you've been trading for a while, you're going to realize that as soon as you place an entry, the market is going to be in drawdown. So there is absolutely no need for you to place 10, 5, 20 entries in the same area, which makes no sense, right? So the goal is to place one entry. Once you do that, then if the market drops like 20, 30 pips, then you can add a second entry at a better entry price. That is you buying at a lower entry price if you're looking for a buy, of course, right? Or if you're looking for a sell, that is you looking for a sell at a higher entry price, right? So once you do that, right, so that second entry is going to be definitely better than the first entry. And as soon as the second entry goes in slight profit, the first entry and the second entry would put you at break even, right? So that's why we do not add more than one entry at a time, because we know most of the time as soon as you get in, you're going to be in drawdown, right? There's no need for you to stacking up entries in the same area, right? So that's one thing you're going to see online. You're going to see guys placing 20 entries going crazy, like in the same area of the market. As soon as I see that, I know automatically that you're gambling, right? So you do not know what you're doing, right? No offense. And we only tell our clients or mentees to only add a second or third entry when it is instructed in the group. And yet again, it goes back to what I was saying, right? Do not add multiple entries at a time. So think about it, guys, right? If you go to the mall and if you see something with like a 20%, 30% discount, you're most likely going to buy it, right? It's the same thing that goes with trading, guys, right? Once you place the first entry, if the first entry goes down minus 20 pips, minus 30 pips, right? your second entry is definitely going to be at 30% discount, if that makes sense, right? So there's no need for you to be buying 20 items with the same price, and they're not even discounted items, if that makes sense. So that's the exact same way you should see entry price as, right? So, and the fourth step is limit active trades to 4, right? We usually have 3 trades running at all times. What I mean by that is you cannot have more than 3 entries running at a time, or 3 trades running at a time. And this is why you'll never see us having like 20 trades or 20 entries. If you scroll all the way down, you see guys having 50 trades running at a time, which is crazy, right? It is impossible to keep track of your risk management if you have 20, 40 trades running at a time. Yet again, this might seem very boring to you guys, because I know no other communities or mentors are showing this other side of trading, but this is the most important aspect of trading, guys. Trust me. Yes, it might seem boring a little bit, but if you're trying to make a profession out of this, you must have an SOP, aka you must have a proper system and trading plan that you can rely on at all times, right? That you also must follow at all times, right? So let's say if you start with $1,000 account, right? We usually recommend for you to keep the same lot size. I'll be going over your lot size in a bit, until your account grows to like $2,000, right? Then you can use a higher lot size, right? Let's talk about risk to reward ratio. I cannot stress this enough, guys. This is one of the most important aspects of trading, because if you have a negative risk to reward ratio, or 1-to-1 risk to reward ratio, most likely going to have to win every single trade for you to be able to stay in profit, which is ridiculous, right? No one has a 100% winning ratio. That's impossible, right? Having a positive risk to reward ratio, like we usually aim for a 1-to-3 risk to reward ratio, right? Knowing that losses are part of the game, you're definitely going to take losses, right? For every dollar that you're risking, you'll be aiming to make $3 back, right? Which means, right, we usually trade about 3 to 4 times per week, guys. Some of you guys probably going to say that we're not trading enough, right? Guess what? The more you trade, the more you'll lose. That is simply how it goes, right? We place about 4 trades per week. And guess what, guys? We have a 1-to-3 risk to reward ratio. The worst that can happen is pretty much us finish the week break even, or with a small loss, right? The reason being is, right, think about it. If you place 4 trades and you have a 1-to-3 risk to reward ratio, you can literally lose 3 trades in a row. Just like last week, we lost the first 3 trades last week, but that one single gold trade put us at break even, right? If you lose 3 trades in a row, right, and the average stop loss is minus 50, right, which means you'll be risking about $50 if you do choose the 5% risk. I'll be going over that table in a minute, right? So that'll be minus 50, minus 50, minus 50. That's minus $150, right? But guess what? The minute you win that one single trade, you make $150, which means that one single trade will put you at break even, and sometimes in positive, right? That is why it is very important to have a positive risk to reward ratio. Having a negative risk to reward ratio is kind of insane to me, because you're definitely going to have to win every single trade. Having a negative risk to reward ratio or a 1-to-1 risk to reward ratio, I do not recommend it at all. You'll be stressing a lot, because you're going to have to win pretty much every single trade, which is impossible. 1-to-3 risk to reward ratio, that's what we use here at Bowman FX, right? So now let's talk about the table. Like I mentioned earlier on, we risk about 1 to 5% per trade. And the thing about it, guys, right, we all have different risk levels, right? Some of our clients are comfortable with risking 1%. Some of them are comfortable with risking 3%. Some of them are comfortable with risking 5%. Let's say if you do choose to risk 1% per trade, your lot size will be 0.02 lot size, which means 20 cents per pip, and the average stop loss is minus 50 pips, right? If you go 0.20 multiplied by minus 50, right, you'll be risking about $10 per trade. Yet again, we have a 1-to-3 risk to reward ratio, right? So if you're risking 10, you at least should be making $30, if that makes sense. And if you're risking 50 pips per trade, 1-to-3 risk reward ratio, you will be aiming to make 150 pips per trade. So let's say if you do choose to risk 3% per trade, your lot size will be 0.06 with a stop loss minus 50 pips. 0.06 means 60 cents per pip. 0.60 multiplied by minus 50, that's about $30, right? You'll be risking $30 to make $90. Yet again, 1-to-3 risk to reward ratio. Same thing. If you do choose to risk about 5% per trade, that'll be 0.10 lot size, right? 0.10 lot size means $1 per pip, right? Minus 50 pip stop loss. $1 times minus 50, that's minus $50, and you'll be making about $150, like I just mentioned earlier on, right? If you do choose the 5% risk, let's say if you take 3 trades and you lose all 3, you'll be down about minus 50, minus 50, minus 50, minus 50, minus 150. That one single trade should put you at break even. But that is only for currency pairs, right? So now if we're talking about gold, gold is extremely volatile, and we do not recommend any beginners to trade gold without having a proper trading plan, right? As you can see, we are going to lower the risk on gold. The maximum lot size recommended on gold is 0.03 lot size if you have 1K in your trading account, right? 0.03 lot size, right? Stop loss for gold is usually like 3 times bigger compared to stop loss for currencies because gold moves really fast. 20 pips on gold is literally nothing, guys, right? But what we ended up doing is that since we are risking a big stop loss on gold, we are going to decrease the lot size for gold, right? 0.03 lot size, right, which means 30 cents per pip, multiplied by 20 pips, you'll be risking about $60 per trade. That's the maximum, right? Usually the stop loss on gold is anywhere between 150 minus 150 pips to 200 pips, right? But if you do choose to use a lower percentage risk on gold, it will be 0.01 lot size, which means 10 cents per pip. 10 cents multiplied by 200, you'll only be risking minus $20. But yet again, if you're risking 20, you're making 60. If you're risking 50, you're making 150. If you're risking 60, you're making 180, and so on and so on and so on and so on, right? We have a 1-to-3 risk to reward ratio, right? The beauty of all this, guys, right? Let's say if you do choose to risk about 3% per trade for currency pairs, right? Look at how much you'll be risking per trade. You'll only be risking $30, right? I'm sure, right, if you lose $30 out of 1K, you'll be comfortable with that, to be honest. I would definitely be comfortable with that if I lose $30 out of $1,000 I account, right? But if you don't have a proper trading plan, a proper system that you can rely on, I've seen people risking literally 50% per trade. So which means after 2 losses, your account is gone. Compared to you risking $30 per trade, it is going to take you a long time to blow your account. Like a long time for you to blow your account if you do choose to risk 3%, 1%, or even 5%. Having a proper trading plan that you can rely on with a positive 1-to-3 risk to reward ratio is going to keep you in the game for the long term. And I've shown you guys the Boomin FX signal chart, and you guys can literally see that the system does work because most weeks it's either we finish the week in deep positive or at break even or with a small loss, right? But for the entire month, we're definitely going to finish the month in positive because you have a 1-to-3 risk to reward ratio. In the previous video, I showed you guys that yes, you can make money consistently in the market by sharing all the P&Ls for the month of September, the month of August, and also the first few weeks of October as well. And you guys clearly saw that we did finish the weeks and the months in positive as well. The reason being is it's not because we're just having a proven working strategy, it's because we have a proper SOP, a proper trading plan with a proper risk to reward ratio that we can rely on at all times for when we have bad days, bad weeks, or even bad months, that we'll still have plenty of money left to trade with, right? So that is it for today's session, guys. And I'm sure if you did take your time to watch this video till the very end, you definitely learned that when it comes to trading, there is much more that goes into it than just having a proven working strategy or even being able to do your fundamental analysis properly, right? You must have an SOP, a proper system that you can rely on for when you have bad days, bad weeks, or even bad months. I'm not saying to follow the exact system that I use, but you must be able to take your time to create a proper system that you can rely on, that you can follow at all times, where you can document all your trades and stay consistent with it, right? I'll keep making this type of contents for you guys. And in my next session, I'll be going over the exact strategy that I use that helped me quit my 9-to-5 and being able to do this full time, right? Stay tuned and I'll catch you guys in the next one.